I'm actually more bullish than YJ on ESS. I certainly see quite substantial deficits emerging into the back of this decade.
America could move from net importer to net exporter of lithium over 10 to 15 years.
Where are you on EV demand now? Let's just call it at $90 oil.
Welcome back to Rockstock Channel. It's Thursday, June 11th, and we're back for another weekly Rockstock recap discussion. I just got back last night from Washington, D.C., attending Benchmark Mineral Intelligence Giga USA conference, and got back just in time to watch my New York Knicks make the best comeback in NBA playoff history, from down as much as 29 points, which is a reminder of a key life learning I impart to my kids: never give up, which is also simplified by two short interviews I conducted with Lithium Americas CEO John Evans and Standard Lithium CEO David Park, who are devoting their lives to proving unconventional sediment and unconventional brine resources can not only help meet U.S. needs for lithium, but like unconventional oil and gas in the past 10 to 15 years, may help enable the U.S. move from net importer to net exporter of lithium chemicals in the next 10 to 15 years. A quick shout out to several viewers who came up to me at the conference: the gentleman from the Department of Commerce who thanked me for all of our educational content, the Amazon guy who asked if I had any additional intel regarding the metals company's proposed Brownsville processing plans. I don't. And the former Patreon member who is considering rejoining our $250 gold tier. It's always great to be reminded in person of the impact we're having with our very diverse audience. And speaking of Patreon, a quick reminder: if you find value in this content, please consider joining us at least the bronze $25 tier, the cost of a few cups of coffee a month. And if you'd like Matt's proprietary quarterly battery materials review, as well as access to Matt and me personally on a quarterly basis, please consider our silver and gold tiers. Please visit patreon.com/rockstockchannel for more information and to sign up. In addition to the LAC and Standard Lithium interviews, check out as well our 10 Minutes with Benchmark's Iola Hughes, who talks about what was a very dominant theme about battery energy storage as a key lithium driver, a point which was also reinforced by a keynote fireside chat with Albemarle's Eric Norris. Another big theme from Eric, as well as the Chatham House Rules event I was privileged to be invited to by SAFE, was solving North America's missing middle, cathodes, both PCAM and CAM, which we'll be talking about in future episodes. SAFE's chairman and former CEO, Robbie Diamond, emerged at Benchmark in a new role as executive chairman of Glomar Minerals, sitting on a seafloor mining panel in which he drew parallels to the shale gas revolution that transformed U.S. energy security. And he gave a shout out to fellow panelist Craig Shesky of the Metals Company for leading the way in pioneering this industry. One more comment before digging in with Matt. I published earlier this week my latest Lithium-ion Bull, issue 114, in which I gave a reprise to the Steve Winwood Higher Love narrative I wrote exactly 5 years ago in June 2021, after lithium, which had just begun its recovery, was experiencing what proved to be a seasonal spring dip, which we've seen in other years as well, which was followed by a recovery by the fall. Matt flagged this historical connection in a tweet late last week. I also suggested in the newsletter that the cyclical capital-intensive mining sector, which has experienced a positive 1-year return, may mirror in the next 4 years the 5-year tear that another cyclical capital-intensive industry, the chip industry, has experienced, reflected by the SOX index. To get this newsletter directly, please visit rkequity.com and register your email there. And finally, as a reminder, we may discuss equities that we own personally or companies for which RK Equity provides advisory services during this video. But nothing we say constitutes investment advice. Please do your own research and read the disclaimer at the end of this video. And finally, a thank you to our sponsor, Clean Elements, an investor group focused on providing growth capital for critical minerals developers supporting the energy transition. Clean Elements has invested more than $30 million to date and is currently the largest shareholder of both Galan Lithium and Noah Lithium Brines, two companies developing high-grade lithium brine projects in Argentina. And with that, Matt, one positive of my driving or having my Tesla drive me down to the conference, and the fact that I was so busy, was that I wasn't looking at my phone for 3 days. But I understood that there wasn't such great news there. So I'm going to leave it to you and to Rodney to tell me, what I missed, and our viewers.
Well, before that, I'd like you to eat a little bit of humble pie, because you've been taking the piss out of me for my call on lithium. But obviously lithium has bounced. So, let's talk a little bit about that, shall we?
Okay. What happened?
So I think what happened in lithium was a couple of things. First of all, lithium got a little bit overbought on GFEX. Secondly, SMM published republished their inventory series, which had disclosure for a new level of inventories that they hadn't previously been tracking. And I think it took the market by surprise a little. I think the market assumed that those were additional inventories, whereas in fact those were inventories that were already in the market. It's just that SMO hadn't been tracking those inventories previously, and I think the market took fright from that, and you got this quite substantial sell-off. But I think once the market got its head around that, then you've got the stabilization and recovery in prices over the last 2 to 3 days or so. So, we've said before that we think that lithium is probably going to be range bound. But I think from a technical point of view, the fact that the low in this move was higher than the previous moves in this upcycle is a positive from a technical point of view. And I think, over the summer, we generally have relatively weak demand from the EV side of things, but it seems that ESS is still going gangbusters. And then towards the end of the third quarter, we tend to get stronger demand into the EV space as well. So I think, it's possible that things could be range bound over the summer, but on Northern Hemisphere summer, I'm more positive into September, October.
Okay. You tripped over your tongue a little bit there, as Eric Norris did when he was articulating, the future of lithium, saying that it's highly cyclical. It will continue to be highly cyclical, but it is maturing. And he doesn't think we go to 80,000. We don't, but not going back down to kind of like 8,000-9,000. So lower highs and higher lows, right, is kind of the forecast over the next kind of number of years. Still, and that's like oil, and copper like volatility.
Well, I think it would be very bad for the industry if we went back to $80 a kilo. I don't think anyone in the industry wants to see that, but maybe a range between sort of $20 and $40 a kilo would be excellent for the industry, the lithium industry, that is. And viable for the batteries industry as well, the cell manufacturing industry and downstream industries. But we'll have to see how that happens. YJ Lee had an interesting tweet out today, just flagging that he's still very bullish on lithium. He's got deficits for the next 3 years. He remains bullish on ESS. He's very bullish on EVs. He's very bullish on commercial vehicles. I'm actually more bullish than YJ on ESS. Certainly out to 2030, not quite as bullish as him on EVs, and pretty bullish on commercial vehicles as well. I don't necessarily see deficits as large as he does over the next couple of years, but I certainly see quite substantial deficits emerging into the back of this decade.
Okay. You're bringing up YJ. I remember we I'm planning to have another bull bear debate with Chris Robb, if you remember him. I had a bull bear debate with him in November of 2024, and he was right for 6 months. I was right on a 1-year basis, but he told me he came out of fast markets last year, in the middle of last year, bullish. And I asked him if he was where was he, because prices are up now. And he's like, he's actually bullish, right? He does see, and he liked YJ's, depth on the demand driver side because he focuses a lot on supply. So I remember I introduced him to YJ at Fast Markets, and when he listened to the depth of YJ's demand, he started changing his thought process, and that thought process has continued to now, where he is more bullish. But we will have him on again. We invited him sometime maybe July, August after the Fast Markets conference, and I'd like to do that with YJ, as well. But so a lot of bullishness on lithium, it seems. I haven't really looked at the equities. I saw while I was interviewing David Park, there was news that we shot something in Iran. Trump.
Well, I think it's been a difficult week for equities, and obviously lithium and critical material equities within that. Yesterday, the day before, was a big risk-off day, really across the markets, and I think you've got two things at play. First of all, concerns around the Iran Strait of Hormuz situation. And secondly, I think a number of, as raised by a number of commentators, this issue with these big IPOs, the AI IPOs coming out in the States, SpaceX and OpenAI, etc., and this view that perhaps a lot of North American investors are going to have to liquidate positions in order to take part in these IPOs. And I wonder if that is also responsible for some of the volatility and the weakness that we're seeing in stocks at the moment, really across the board.
Yeah, I mean, that's mostly, Matt, that's pretty much obviously short term. In the end, macro is going to play out here, although the IPOs are like a black hole sucking all the liquidity out of the market, and people change limits as to who could participate and so on. So retail has been dragged in. Interesting, your thoughts, Howard saying volatility will remain. I guess the issue is how much of the market is settled in long-term contracts for demand supply and how much isn't, will always be a sort of question mark around the volatility of lithium versus the volatility of other commodities.
Well, I think the interesting thing about lithium at the moment, as I see it, is potentially it could move at odds with the wider market. It could be sort of a little bit more correlated with oil prices, because as oil prices are higher, we potentially could see a movement out of ICEs and into EVs, which would make the lithium market tighter. So I could see a situation where lithium as a commodity could be non-correlated with the rest of the commodities complex, and particularly with the primary market of lithium in the world being in China, and it being less exposed to North American and Western investors. I think that there is a situation where lithium could be less correlated to markets in the West than other commodities, should we say.
And Matt, China just printed a horrendous economic growth number. And you raised the question of your EV demand versus YJ's. I mean, it looked like there's quite a lot of consumer pressure in terms of buying cars in general. Exports is what's propping it up at the moment. Where are you on EV demand now? I mean, I guess let's just call it at $90 oil for the year.
Yeah. So I mean, this is a really difficult one. I mean, my EV growth numbers out of China are higher than the current growth rates. The year started off really badly. January and February, China was negative, double-digit year-on-year growth rates. It reaccelerated a little bit in March. Anecdotally, it's been stronger in April and May as well. So I'm not changing my EV demand growth numbers in China for now. because I do think that the higher oil prices will translate into stronger EV sales growth. But obviously, if we get to the June data and we are not, back to double-digit EV sales growth on a year-on-year basis, I probably will have to start thinking about looking at my numbers. But anecdotally, we are seeing stronger data, out of China EV sales in May. There's no getting away from the fact that the real strength for the OEMs in China is in exports. And, certainly the big established players like BYD have been losing market share in China. Now, this is not an EV story in China. It's actually a broad passenger vehicle story. Passenger vehicle sales in China have been very, very weak in the first few months of this year. In fact, EVs are outperforming, but it comes back to the strength of the Chinese consumer as a driver of the Chinese economy. And the Chinese consumer has been another year in the doldrums, and with the removal of the subsidies or the rolling back of some areas of the subsidies, this year, it's been it's definitely a much more difficult market in China. Having said that, generally over time, we've had periods when we've had, 2 very strong years and then a weak year for Chinese growth in EVs. And that was kind of what I was expecting. I just wasn't expecting it to be this week. So I'm really hoping that the higher oil prices will bail me out in terms of my forecasts.
Okay. Outside macro, in the rare earth sector, I think you flagged for me that, Rare Earths Americas, who I had a chance to catch up with at the conference, went below their IPO price of $19. I haven't watched it now, but all of their analysts actually picked up coverage, right? There was a 30-day quiet period. So I have a research note here in front of me from Stifel, which has a target price of $30. If any of our viewers here, we're an advisor to Rare Earths Americas, so not investment advice, but if any of our followers are interested in this U.S. listed exploration story with 4 assets in Brazil and in Georgia in the United States, please ping me at rockstockchannel@rkequity.com, and I can connect you to the company and get you some of that research. But to broadly rare earths, I mean, what's happening? Any news out there? There was a lot of deal flow a week or two ago, in the rare earth space. I think we talked about it last.
It's been a difficult week for the rare earths. I mean, I think perhaps the rare earths sold down because of this, reallocation of capital in North America, and obviously rare earths has been a big story for North American investors. And maybe that's why the rare earth space got really, smacked maybe a little bit harder than it should have done. I mean, from my point of view, nothing's really changed. This is a long-term story. I did a blog a couple of weeks ago flagging this substitution of DYTB and just saying that, I thought concerns on the demand side were overcooked. And, we still need to add 4 or 5 new mines worth of DYTB over time. And I would definitely say that I think people's forecasts in terms of humanoid robots rollout and demand for rare earth magnets are too low. And I think they will come up over time. So, I'm not worried about the sort of heavy rare earth outlook. I think there's still a very, very strong demand outlook and a very limited number of projects that can come in to fill that gap.
Okay. That's good to hear. You talk about substitution. I was just thinking there was one panel at Benchmark that was all about copper. And I think on that panel was Turner Caldwell, who is the CEO of Mariana Minerals, which is a private company, but he's prominent because he's ex-Tesla. He was the person who led the lithium refinery project. And I asked him, Matt, how's it going? Because you had heard some things maybe not going so well. He said, as far as he knows, everything's going, well. He's not, super close to it. But more broadly, though, they just brought up, like, if copper price goes too high, then, the substitution effect for aluminum is real. So
I think the aluminium story is very, very interesting. I mean, I was looking at some data today, just looking at the monthly production, and it's very clear that there's been, a year-on-year fall in production globally over the last couple of months because of the shut-ins of the Gulf aluminium production. And as I said in my tweets, it's not that easy to restart an aluminium smelter once the aluminium metal in the pots has solidified. And then you basically have to chip it out. So we're talking, 9 to 12 months to restart a full aluminium smelter. And they're not going to restart until the strait is fully open for business. So the two largest regions for aluminium production growth over the last 10 to 15 years have been China and the Gulf. And if you therefore shut in a large amount or the large proportion of the production in the Gulf, you're probably talking about a slowing rate of growth, potentially negative growth in terms of production. So, yeah, I think for me, aluminium is a really, really interesting story here that a lot of people are still going, oh, yeah, aluminium has been a dog for the last 20 years. I'm not going to look at it. But actually, it's worth looking at.
Okay, great. On copper, just actually before we started recording, I saw the All In podcast had a presentation of Dan Dreyfus. This is not a super well-known name like Jeff Curry is, but he was giving very much a macro piece that we've been talking about for a long time about, the transition into capital-intensive, metal industries, and we're in the very early innings of that. I knew Dan when he was at Goldman Sachs, pre, Dodd-Frank, before the financial crisis, when, the Goldmans of the world had hedge funds on their desk. Rodney, I think you remember that when you were at Macquarie, the good old days. So I remember him at Goldman, investing in one of our iron ore developers in Brazil. But he was also very friendly with Robert Friedland. And I think I counted at least 4 Robert Friedland isms in his presentation at the All-In Summit, including, seeing a telescope to see the price, Vujade. But also he was espousing a very bullish view on copper, talking about, the next 10 or 12 years. Anyway, he's a good guy. But the more important point here is the All In podcast had this liquidity summit where they interviewed a number of important New York hedge funds and other hedge funds, but they typically have some of their Silicon Valley friends. But, they had Dan Loeb at Third Point, Dan Dreyfus, and they also had Bill Ackman. So I found all of those, very interesting, and informative. But these are kind of my peers. When I say my peers,
did
right?
anybody
my age.
Did anybody talk about the El Niño event? Because I think that's going to be a very, very important trade over the next sort of 6 months or so.
I have not heard of the El Niño event. The only person that ever flagged the El Niño event to me, I remember, was you when you were at the hedge fund a few years ago, and you were saying it might impact, the Atacama because they'll have a lot of rains, but those rains didn't come. So, yeah. But you're flagging it again.
It did impact global cocoa production and various productions of agricultural commodities. So just to flag that the U.S. National Oceanic and Atmospheric Administration, NOAA, has declared El Niño for this year. So, if you are interested in the broader commodity spectrum, particularly the ags, keep an eye on some of those, because the last El Niño had a big impact on agricultural commodity production.
Okay, but El Niño, that's just the weather. You don't know exactly where it's going to hit, right? So,
well, it's you know which areas will have specific rainfall. So some areas will be dry and some areas will be wet. So it impacts. Last time around, I think Africa and some of the key sort of cocoa producing areas were very dry. And I think Latin America was very wet, although it didn't go as far as Chile and the Atacama. But they reckon this could be one of the strongest El Niños on record. So it is possible that it could disrupt production in Latin America of lithium brine. So keep an eye on the weather patterns. As a Brit, I always keep an eye on the weather, but
Okay.
yeah, everybody should.
But basically, if there's major rain in the Atacama, lithium production out of Chile might be lower for a couple of quarters, and that could be a supply disruption that nobody's forecasting, but you. Potentially.
I'm not forecasting it at the moment. I'm hoping
but
for
you're
but
okay.
Yeah, we'll keep a close eye on the El Nino event. As Howard said last time, it wasn't as impactful, but it has been impactful in the past in terms of lithium production.
All right. Anything else?
No. Anything from you for the conference? Anything stand out for you?
Yeah, a number of things. I'm still processing them, but the attendance, I've been going to this benchmark events. They're in their 11th year. So, but their Washington flagship event, I remember going there. I think it was 2016 or 17. It was the first one. It was Chatham House rules. This one was not, but Sarah Maricel, who is now at Rio, but she was at Tesla. Everyone was wondering what was going to be said there. There was all this competition, among lithium developers, for who would be the lead speaker, and it was James Callaway of Ioneer, who gave a speech about, the 4 different lithium types, sediment, DLE, rock, and I guess salt and sea, or conventional brines, unconventional. Anyway, so back then, there was Piedmont, Lithium Americas, Standard Lithium, et cetera. Like the conference now is not so much about lithium, right? Eric Norris was there and he spoke, but it is very, very broad and diverse. And I think you'll see that. I was interviewing Iola Hughes in front of, their sponsorship banner, which was much bigger than it was, last year, but it was very diverse and it was extremely. I looked at the attendees and like half of the attendees, or maybe 40%, were government attendees, right? Like you go in there and it was Department of Commerce, Department of War, the U.S. Trade Representative, the Department of Homeland Security. Like there was just a very large number of government people there getting educated. Some of them were speaking. And then a number of the speakers were like lobbyists. Right. And there were a lot of lobbyists. Right. So like there's a lot of people trying to figure out Washington, D.C. And Washington, D.C. There's a lot of companies have government affairs people. Right. They still do have investor relations, business development. But the number of companies who have government affairs people as part of their team with offices in New York. I spent a lot of time, talking with a lot of them, and I was trying to figure out like, where does lithium fit? This whole like lithium to battery now. I keep pounding the table, rare earths to magnets is translating into high valuations of rare earths companies, right? And the pushing of nuclear, is pushing companies like Oklo, to have a very high valuation. But where is the government narrative and thought process with respect to batteries, and the lithium supply chain, which is a bigger industry than magnets, and it touches and the only difference between lithium and rare earths is that China has weaponized rare earths. They haven't weaponized lithium yet, right? If they weaponized lithium, then maybe they would be as paranoid about lithium. But in the first year of the administration, lithium and batteries were seen as EV connected and renewables connected. So the government was like kind of like actively resisting it, right? Chris Wright was constantly, the Secretary of Energy was constantly saying negative things about lithium. So they've acknowledged that the administration has stopped actively like kind of resisting the sector, but they haven't started actively promoting it. But a lot of the administration behind the scenes, a lot of people know about it and are interested and focused on it. But the reality is there are 60 different critical minerals, and there's a lot of, there's not a lot of people in the government who know a lot about this stuff, right? So that's why the White House put out an executive order saying we're going to pay $400,000, right, to hire like 400 mining engineer, finance, anyone who knows anything about mining, come to the administration and help us. And if you think about all the different critical minerals, all the things that they need to process, and then they're seeing a lot of different junior companies, right? And just imagine, oh, I just had a meeting with this sediment company, right? And then I had a meeting with this DLE company, and then I had the meeting with this hard rock company, and that's just lithium, right? And they're trying to process, oh, like DLE, oil field from DLE is cleaner and more environmentally friendly than hard rock, right? And the hard rock guys are saying, yeah, but it's not proven, right? Like, and they're trying to process, this just for lithium, right? But then people are saying, well, we need cathodes, right? We're not going to produce if we don't do cathodes, right? And then there are graphite people coming in, and there are nickel people coming in, and cobalt. So it's hard to figure out for the administration to figure out. But there was a lot of activity in January and February. We saw with Forge and Pack Silica and Project Vault, and there was some further dialogue about the progress on those. A lot of work's happening behind the scenes, but there's still a lot of ad hoc. The deals that are being done, it's just there's not a lot of predictability. Trump is generally unpredictable.
Up, is it?
No. Trump is unpredictable in so many ways, and this is unpredictable. But there's a lot of activity. There's a lot of paranoia about it. But I fundamentally just, if I were advising the administration, lithium and the battery supply chain, I see as somewhat different than a lot of the other commodities. One, it's medium size and growing fast, right? So it's neither super large or super small, but within lithium specifically, I think the United States has great resources. We have great processing capability, and we should view lithium slightly differently than some of the other commodities, in that it's not a question of scarcity, but it's a question of opportunity. And as I mentioned earlier, both Standard Lithium and Lithium Americas are trying with unconventional resources to get their projects up. But America could move from net importer to net exporter of lithium over 10 to 15 years if, so it's an opportunity for the government to do that, rather than, oh shit, we can't figure this out, we're so far behind, but we at least need to find enough for our domestic needs, like that might be the case in certain rare earths and certain other non-rare earth, defense application commodities. So the biggest takeaway is the government's on this, and this event was in Washington, D.C. It's an important, event, and I think worth going. But it was a good update. I go there once every 6 months, so I got an update on where the state of play is, and I'm going to keep monitoring it. And there'll be a lot of people at the Fast Markets conference at the end of this month as well, so those conversations will continue. And within that dialogue, there was a lot of focus on PCAM and CAM, right? The missing middle, because we do have a lot of battery plants and we have a lot of EV plants, and there's lithium, but someone like Exxon, one takeaway is that Exxon basically said, Standard Lithium will be first, right? It won't be Exxon being first, in the smack over, in their opinion. So they have, I think, slowed down a bit of their, certainly their timeline. But I think a reason for that is, in part, is that they don't want to sell lithium chemicals to China, right? So they're pounding, their main mantra is where are the cathodes? How do we bring the cathodes here? They want to know that there are immediate buyers in America before making an FID, I think, right? Because the reality is that Thacker Pass might be selling, will likely be selling their first product to China. right? Because there's not that much cathode here in the U.S., and that kind of defeats the purpose.
Well,
But
I'll be moderating a session on the missing link at the Fast Markets conference.
is that right?
So yeah, look forward to that. We'll talk a little bit more about that. Maybe have some feedback afterwards.
Okay, good. I'm moderating a panel on DLE, actually, so I need to get smarter on a number of the attendees there, which include, I think, Aramet will be on it, but also T. Gegan of Energy X, and a couple of others will be on there. I'm also hosting a fireside chat with MP Materials, Matt Slauscher, right? It's the first time I've done a rare earth specific thing, but anyway, looking forward to that. I don't have more. Those are my main takeaways, and I'm still processing a lot of stuff. Literally, I got back last night, watched the Knick game, and haven't really fully processed everything, but we did want to get this done today. To be continued with some further takeaways as I digest them. Okay, so just make sure to stay tuned. We have 3 interviews with Iola Hughes of Benchmark Minerals. I think that she'll follow our interviews with Lithium Americas, John Evans, and Standard Lithium's David Park. It's our first ever interview of David Park. So for all of our viewers who haven't looked at Standard Lithium at all, I think you'll enjoy just that quick 5 minutes, and hopefully we'll have him on for a deeper dive in the not too distant future. All right, John Evans, you just gave a presentation at Benchmark, and also you were a part of the SAFE event, Chatham House Rules, but obviously can't talk too much about that. But what are you saying here? What was your message to the audience?
I mean, look, for us, obviously lithium's growing. I think the audience here is quite surprised and has also heard from Panasonic the major growth in energy storage systems, grid scale storage, the need to have cathode in the U.S., and the willingness for companies like Panasonic to want to buy domestically. So, we addressed that yesterday during the SAFE conference, and I'm at a conference tomorrow. It's mainly the U.S. government that's talking about the same thing. So I think the good thing when you come here is there's a real desire still to want to onshore the entire supply chain, and I think a recognition too of what's missing. We can be competitive globally in lithium, but to really make sure you have everything you need here, you need cathode, and frankly you need anode too, but cathode is a major need.
That was my biggest takeaway of the panel you were just on, which Austin Devaney moderated, and Standard Lithium was on it, Panasonic and Energy X. But yeah, when it came to PCAM and CAM, the guy from Panasonic who makes Tesla's batteries here in Nevada said they are going to get into cathode.
Yes.
Right, and that was what I was arguing for at the SAFE thing, was just like FDI, Japan, Korea, come here.
Sumitomo can do it. Instead of shipping in a jelly roll, just do it here. They have the tech. It's not a question of we can't do it in the West. It's a question of whether we want to or not. The U.S. is the biggest market that's sort of homogeneous, unlike Europe, where you're dealing with all the different countries of the EU, and they all have different sort of desires and wants. So I think it's very natural. And then I think even with EV sales sort of flatlining in the U.S. or being down literally in the U.S., now you have a major push globally because of the crisis in the Middle East, which I don't think is going to return back to normal again. I think people's behavior is going to change. And you're already seeing, China, I think they exported $20 billion worth of green tech equipment, solar panels, all the other batteries and so forth last quarter. So I think the world is going to be moving this direction where it's all the above, and energy security and lithium and batteries are going to play a huge part of that. And the U.S. is coming along with it. So. Okay, when we interviewed you in January, the Iran war hadn't happened, but we did talk about the administration's focus was still very much rare earths to magnets. It's still very much the case. We still hear things about like tungsten. We still hear backing of nuclear, but we still haven't heard so much from the administration, about lithium to batteries. And again, in the last 3 months, the Iran war has taken a lot of this off of the front page. But behind the scenes, I know a lot of activity is going on. So, like, what are you hearing about the administration's, support and narrative, in connection to the supply chain? Very focused on batteries in general. Lithium's a piece of that. Lithium's not on page one like rare earths are magnets. It's a different kind of problem. And you don't have hardly any of none of the infrastructure in the U.S. outside of MP's operating line. So the load there is a lot bigger. And then, of course, exacerbated by actions China has taken. So it's front and center for the U.S. government. But batteries, you heard about it yesterday. There was a lot of government people there. I'll be at a government meeting tomorrow, which I'll be outnumbered 3-1 by government people, where batteries and lithium is in that loop is extremely important. You might not hear about it as much, but there's certainly know it's a major strategic issue. That was the impetus of the meeting yesterday, but tomorrow I'll be at it's the same thing. So I think it depends what the burning crisis has been, and magnets have been the burning crisis for the U.S.
All right, and tell us about LAC and Thacker Pass and what you're telling investors.
We're moving along. I just ran into my DOE colleagues here. Lots of pictures around the internet every single week. I think people forget we're actually in the throes of construction at this point. We've got 1,600 people on site today. So no, we just haven't started. We're going to be 70% complete by the end of the year, and we'll be starting up next year. So I'm excited, and it was nice just to give everybody an update and just kind of put in action. We've talked about these projects for years. We're going, and my hope is that we'll have projects behind us as well, because we're not big enough on our own.
Yeah, I remember listening to you here 2 years ago, and it was in a bear market, and there was all this kind of like lament about, it's time to stop talking about it, and we've got to start doing it, right? So it's really nice to see those construction pictures. It's being built. You said you're spending $4 million a day.
Yeah, roughly. Yeah.
Okay, so good luck with that, and we're very much looking forward to continuing to follow the process. And you're a major part of the solution of America self-sufficiently, and hopefully, ultimately, build a business which we can become an exporter at some point.
Absolutely. Thanks, Howard.
Thanks, John. Okay, we're here with David Park, the CEO of Standard Lithium. We've never had you on the podcast, but you were very present on 2 panels, I think, and Congressman Westerman gave a keynote speech from Arkansas, and he mentioned Standard Lithium in his conversation. So we're here in Washington. David, just tell us a little, what you've been saying here, but also for our audience who may not know you, just a quick background of you and Standard Lithium, and
sure,
then we'll dig in.
Sure. So I think Howard, Standard is working to develop a 22,500 ton lithium carbonate facility in southern Arkansas. That's one of our portfolio projects we have in the Smackover Basin. I'm here, we're looking to get to FID by year end this year and be producing in 2029. Here primarily in DC, showing my appreciation to the federal government for the work they've done and helping us get through a smooth and efficient regulatory process, getting through our NEPA process with a finding of no significant impact. Also thanking the Department of Energy for the work they've done in securing a $225 million grant for us, as well as the work USXM has done to help project finance what we're doing. But while we've had those benefits for what's happened in DC, I wanted to make sure people were also aware that getting these projects off the ground is not easy. They take time, require a lot of diligence, a lot of effort. They're not slam dunks. So we're appreciative for the work that that the federal government has done to help us get going. We're appreciative also for the Arkansas delegation who have helped us get to that point. And but we just wanted to make sure people know that in a large part they've done their bit, and now it's up to us to get this thing built. And we're working diligently every day to make that happen.
As I'm listening to that, I mean, there's a lot of similarities, some difference, but a lot of similarities with the path that Lithium Americas took to fund Thacker Pass. I mean, you have a partner, 45% partner in Equinor. They have a 38% partner in GM. They got a DOE loan, but you're looking at an ex-Im loan, and you're ex-Koch Industries, right? So why don't you talk a little bit about that? Koch made a $100 million investment in Standard Lithium and a while ago, but I think Koch then sold that technology to Aquatech, which is a partner of yours. Anyway, so there's a lot of things I know about the project, but
Sure.
Why don't you talk a little bit just about all of your partners? And we did interview John. John's under construction now, but you are like extremely close to the point he was, I don't know, a year, 18 months ago.
Yeah, that's a good analogy. I think I like to think we're next man up domestically from a lithium production perspective. I did spend, as you said, close to 30 years at Koch Industries. In my last role at Koch, my team made the $100 million investment in Standard Lithium, and also encouraged them to look at Koch's DLE technology at that point in time. Great relationship with between Koch and Standard. Standard's founders had the foresight of realizing that if they were going to be successful as a junior company building billion-dollar plus projects, they needed to have the right partners. So they had they partnered on technology with Koch. That's subsequently been sold to Aquatech. Koch remains one of our largest investors. We're just licensing the technology they provided us is now owned by Aquatech, and that relationship has been fantastic. 2 years ago, just over 2 years ago, we brought in Equinor as our 45% joint venture partner. They've been a great partner. They've helped us grow up, they've helped us professionalize. They brought not just capital, but they brought capability. So if you're going to be successful as a junior trying to develop billion-dollar plus capital projects, you have to have sufficient humility to understand you need the right partners. You need to bring in technology partners, joint venture partners, offtake partners, and financing partners to get it done.
That's great. You spent 30 years at Koch. It's not every body who, and you led that investment, and then you left Koch to become CEO of them. And that's a substantial decision to do after such a long career. And you know, it's not necessarily, it's somewhat risky, right? Like, so just like, what made you do that, right? You must have obviously seen some massive promise here.
Yeah, so Howard, I may not know it, but I originally left Koch because I was retiring. I thought I was skiing and mountain biking. And it was really an approach from the founders of Standard where they reached back out to me. We'd known each other for a few years. And they asked me if I'd come on board as an advisor. And really, I said yes immediately because I'd worked with the team for the last few years. And I was impressed not just by what they were trying to build, but how they were building it. And the culture of the organization, which was really built, it was a culture based off partnership, and they had strong humility and intellectual honesty. I watched them pivot from using their technology to using Koch's technology, and I've seen them pivot from going from one resource to another resource, not getting too fixated on their original plan. So they followed scientific method. They were, intellectually honest in their approach, and they have just a portfolio of projects to build out over time. So that was truly exciting. Plus the overall macro, the macro bets associated around lithium, whether you're doing it for purposes of energy transition or energy addition, lithium itself is foundational to U.S. economic and national security.
The point you make about how much time and effort and work that it takes to succeed in DLE, and any process in particular, but that was mentioned by Chris Williams in our most recent podcast, and he visited Eramet and was very impressed with, again, the years that they spent on that. And similarly, he talked about Vulcan, who spent a lot of years building that, and that got fully funded. Similarly, Lithium Americas and Thacker Pass and Standard Lithium has been at this for a very long period of time. So the world is going to need unconventional resources, in my opinion. America went from a net importer to a net exporter of oil and gas by tapping unconventional resources.
Absolutely.
And, Westerman, the congressman, was speaking. Tom Cotton's from Arkansas. Governor Huckabee is the former White House press secretary under Trump 1. It's a very friendly state to kind of get stuff done. So I'm quite optimistic that, we've watched Standard Lithium from the sidelines for a number of years, and really appreciate, the first opportunity to have you on, Rockstock channel, and hope there'll be more of these follow-ups in the future.
Thank you very much. Appreciate the time and look forward to future discussions.
Okay. Cheers.
Thanks, Howard.
All right, Iola Hughes, it's the end of Giga USA. I'm about to get in my Tesla and have it drive me home. But why don't you, the story listening to you today was not so much about EVs, but it was about BESS, including, I heard a snippet from Eric Norris saying that they had forecast 15 to 40%, a very wide range of lithium demand, and within that is because they didn't know where ESS would go. So they thought it might be 50%. It was up 100% in the first quarter from their side. So we've had you on. It hasn't been for a few months, but I guess what did you tell everyone who was here? Your latest thoughts?
Yeah, so I hosted a panel today with LG and Samsung, and also a speaker from Spearmint Energy. And it was really interesting being on a panel with LG and Samsung, and particularly the speakers there. I've been in panels with them in the past, and the conversation was entirely about the EV market. And now there's a complete pivot, and the conversation is fully around energy storage. We've seen that in their kind of reaction in terms of their pivot over to LFP manufacturing for energy storage. And that really comes into the overall demand story. So this year we're expecting energy storage to account for over 40% of battery demand within the US market. On a global scale, it's a bit different. We're looking at about 20% demand for energy storage. But in the US in particular, energy storage is really a key pillar of demand now, and is driving investment decisions towards energy storage.
A question that I asked, which was not asked, was as follows. Anthropic is paying XAI, which is now part of SpaceX, $1.2 billion a month. And now Google is paying $900 million a month for compute from Colossus, which, Elon's got the chips, he's got the natural gas, but what else does he have?
Batteries.
He's got the megapacks.
Yeah, absolutely.
So has anybody made yet this connection, this is real. Anthropic is short power.
Yep.
He's got the power. How important are those batteries to Anthropic and Google's getting that power?
Yeah, so it's really interesting. I think over the last 8 to 12 months, we've seen a shift where there's been a lot of conversations around batteries used at data centers, but now we're seeing actual projects being announced. So we're currently tracking just under 60 gigawatt hours of data center batteries. So that's officially, contracted batteries at projects. Of that, I think about half comes from the Form Energy 30 gigawatt hour novel technology battery. But the rest of that is lithium-ion batteries, which are going to be used at data centers. There's a number of different applications when it comes to batteries at data centers, but I think increasingly people are seeing how much benefit they can bring to data center applications, whether it's load shifting, speed to power, or a whole range of other applications. One of the big things to watch out for in the next month or so is further guidance from FERC around large loads, and whether there's going to be a requirement in there for those large loads to bring flexibility. And if we see that come through in a positive way, it would present a very large upside for batteries.
Wow, okay. So that's important to keep track of. I had a conversation with someone here from the Volta Foundation, which represents the battery industry, I guess, on a global basis. And he was talking about how the Korean battery plants in America, which that you just mentioned, have had to pivot from EV to ESS, but it's also gone from NMC or NCA to LFP. And those battery plants, though, are still not making money, and they're at 50% utilization. That's just a comment. But I was asking him as well, just like we saw GM partnering with Lithium Americas and other, and MP and other parts of the supply chain, should the ESS, those who need power, now be the off-takers for batteries in some way? And if so, should it be the utilities? Should it be the hyperscalers? Who should it be? And he said he thinks it should be the hyperscalers, because utilities are too slow, and so the Googles of the world, the Anthropics. So could you see, just like Elon vertically integrated at Tesla, Sam Altman and Satya Nadella and others who are building battery plants, data centers, understanding they need to own and build other parts of the supply chain?
It's a good question. I think it's not an obvious one yet. Power is very important for these data center developers, but ultimately the main power source they'll still be going after is natural gas. Batteries are more seen as a complementary solution to assist that. So I think if they were going to really invest in the speed to power kind of angle, it would be via other sources. We've seen it with nuclear, with 7 Mile Island, to Google investment
3
there.
Mile.
3 Mile, yeah. Can't remember how many miles. The investment there. So there is an investment in energy and sourcing that way.
It's nuclear.
But whether it goes all the way,
battery.
yeah, exactly.
So, but
whether it goes all the way to, critical minerals, maybe not quite yet.
It wasn't that long ago that Elon Musk said he needed to have a battery day. He had a battery day, and he had a cathode, and he had a lithium hydroxide strategy. But he was saying he has to get into the battery business because there's a battery shortage. The world is not making enough batteries, right?
Yeah.
So, but then he stopped that, and he stopped his objective of having 20 million EVs on the road by 2030. But might we be in a battery shortage problem if batteries are the complementary solution to Colossus, right? Like, so nuclear is far into the future. Natural gas also has a long wait list, right? And the reason Anthropic and Google are renting from Elon is because he doesn't yet need all the compute, but he had the foresight to kind of build that. So I'm just wondering, there's a big race going on here, and if they get the natural gas plants, will there be a battery shortage?
So on a global scale, no. Last year, the nameplate capacity of all the gigafactories in the world was over 4 terawatt hours. Cells produced was like 2.2 terawatt hours. So
50% capacity.
Yeah, there's a huge amount of capacity on a global scale. Obviously, when you drill into the US in a bit more detail, if you were to make some assumptions that maybe data centers only want to source domestically made cells, which is not an obvious assumption to make, then maybe you would run into some issues. But if we're living in a world where cells can be sourced from anywhere, or there's workarounds in place, then I don't see a cell supply shortage being an issue. I think there's other elements of the supply chain which could see a larger crunch.
Okay, so as long as American data centers are fine to have CATL batteries, there's no shortage.
Yeah, exactly.
But from other panels that I've heard, like the Department of War is trying to de-Chinaize every component of the military supply chain. And this actually gets to a point, I think, that Jesse Edmondson at Standard Lithium made in a piece that he wrote with Morgan Bazilian of the Payne Institute in Colorado, was that we should force the data centers to buy domestic, right? Just as we force them to buy domestic for EVs. He said, why are we prejudicing, like, just level playing field? Wherever battery goes in, right, should have a foreign sourcing requirement. So I think that's a important idea. There's a lot of ideas. We're in DC for this conference. It's filled with Department of Energy, Department of Commerce, Department of War people here, and there's been a lot of policy discussions here that it's ever changing, but like the best ideas need to kind of like rise to the surface to kind of solve this problem. But AI and data centers and battery energy storage is now much more the topic than EVs. That's for sure a key takeaway. Anyway, Iola, thank you very much for sharing your knowledge.
Thanks for having me.
Okay.